Palantir is in the news. In the last month, the stock has grown more than 40%, from about $8 to about $11.50. But is this stock a buy for the long term? We'll find that out in this video. But first, please show us some love by subscribing to the channel. Done? Then let's go. We're going to cover this in 3 parts. First, why is Palantir stock doing so well right now? Next, we will talk about the things that Palantir is getting right and what its long-term prospects are. Towards the end, we will try to estimate where it might end up in the next 10 years and what it means for investors. So what's fueling Palantir's rally? The company recently posted its second consecutive quarter of positive GAAP earnings, and management is hopeful that the firm will continue to have positive GAAP net income in each quarter of this year. This was something that Palantir's investors had been hoping for, and it's part of the reason why the stock rallied as soon as the earnings announcement came. The second catalyst was the recent investment in Palantir by Cathie Woods. On May 10th, her flagship ARK Innovation ETF bought over 3.75 million shares of Palantir, which fueled a second rally for the stock. But what's Palantir's secret sauce? What are they getting right? And what does that mean for Palantir in the long term? Palantir is a revenue juggernaut. It has been posting higher than 25% sales growth for 4 years. Net earnings have so far been negative, but as we said earlier, they might turn positive this year. Now, most analysts predict that AI technology and services are going to grow between 25 to 30% for at least the next 5 years. That's part of what is fueling Palantir's growth as well. However, the company is unique because it has found a compelling niche that is helping it capitalize on the AI boom. It has created large-scale AI solutions that work for the corporate sector, especially the US government. There are very few others that are competing with Palantir in its industry, and with each quarter, they are slowly building a moat around their business. There's been some criticism in the past for the company's overdependence on the US government for revenue, but things are changing on that front as well. Palantir grew its non-government client base 7 times in the last 2 years. Revenue from these clients is also growing side by side, with the first quarter of the year showing a 26% growth. They are also increasing their presence in new markets, such as Korea. In recent presentations, Palantir has been talking about the huge potential of its latest offering, AIP. This is a large language model solution for corporate clients that is seeing unprecedented demand. It's software that provides a solution similar to ChatGPT, but on a private network and using private data, giving businesses the benefits of large language model AI, but in a secure environment. As of now, these are the factors that are going to continue to fuel revenue growth for the company in the coming decade. With that, let's try to do some very basic projections. Palantir is currently valued at about $25 billion. Their revenue grew by about 25% last year, but the latest management projections for this year are for a 16% growth. We can try to make 3 scenarios for Palantir's revenue growth for the next 10 years. Optimistic, realistic, and pessimistic. In a pessimistic growth scenario, let's assume that Palantir grows by 15% each year till 2027, and then its growth tapers off to about 10%. Given the trend in the last 5 years, those percentages are not very high. In that case, it might end up at a point where its annual revenue is about $7 billion. Now, let's consider a case where the company continues to grow at a realistic pace. Let's assume that Palantir grows by about 20% until 2027, and then its growth falls to 15%. In this case, it could reach a revenue of about $11 billion by 2033. Lastly, if Palantir really puts the pedal to the metal, it may end up with an annual revenue of about $17 billion. We're assuming 25% growth until 2027 and 20% growth afterwards. We want to remind you again that these numbers are just projections and can be very different from what might actually happen. Palantir is currently valued at a price-to-sales ratio of about 12.5. Companies such as Microsoft, which grew by less than 10% last year, have their price-to-sales ratio at about 11.5. So 12.5 is a fair assumption at the end of 10 years, even if we assume that Palantir would still be growing at 10%. With that in mind, Palantir could potentially end up with a market cap between 90 to 200 billion in 10 years, depending on which of the scenarios plays out. That means they would grow their value by 3.5 to 8.5 times, assuming the assumptions hold. Investors can compare this to the 10-year returns on the average closing price of NASDAQ, which is about 2.3x. So what's your view on Palantir stock? Will it beat the market in the next decade? Let us know in the comments below, and please subscribe to the channel if you like the analysis. And if you want to get the fastest moving stocks based on world news and current events every morning before the market opens in your inbox, subscribe to our free newsletter, theelitetrade.club. Thank you for watching.